Money FM 89.3. Best of breakfast. The U.S. Market Update with Money FM 89.3.
Good morning. Welcome to the U.S. Markets Wrap with me, Ryan Huang. We've got a pretty mixed session, but we did see tech shares on the up as we got a federal court decision in an Alphabet antitrust case, fueling optimism that the tech giants will be able to weather regulatory threats. So that saw the tech-heavy Nasdaq gaining 1%. The S&P 500 up 0.5%. On the flip side, the Dow Jones Industrial Average underwater by 0.05%. Let's check in now with Joseph Sroka. He is the CIO and co-founder for NovaPoint Capital, speaking to us from Atlanta, Georgia, USA. Good morning, Joseph. How are you doing today?
I'm doing great, Ryan. How are you?
Doing great as well. Always good to have you on the show, Joseph. Let's talk about what's playing out in the markets right now. We are seeing what is a bit of a momentum, I suppose, in tech shares right now after the Alphabet decision. Walk us through your expectations of where this is going from here.
Yeah, so today in the market, Alphabet had a good day, Apple had a good day, so that really was what carried the S&P 500. A lot of that was built on Alphabet's antitrust remedies ruling. While the company, was found by the judge to have illegally monopolized its search business, the punishment was less than expected, and that the company is not going to have to divest its search business. It is going to be barred from exclusively creating search distribution deals, with companies like Apple or the different Android system OEMs like Samsung. But all in all, that was generally deemed to be less of a punishment than the market anticipated for Alphabet. So it was up 9% on the day. And then, like we said, they're not going to be banned from working with Apple. They just can't have an exclusive deal with Apple. So Apple's still going to get a revenue stream out of this. And that was generally seen as a positive for Apple, which is up about 3.8% on that news. So all in all, kind of tech carried the day. Otherwise, to your point, the market was a bit mixed, and actually there were more decliners than advancers on the session.
Yeah, from what I can tell, both sides are going to be appealing, both from the Alphabet side because they didn't win completely on all fronts, and also DOJ is also going to be appealing. So this could drag out for years. So I'm just wondering how much we should be paying or putting weight into this ruling.
Yeah, no, like I said, I think it was more of a relief rally because if it had been ruled in real time now that they were going to have to divest the search business, that would have been, very disruptive to Alphabet. So investors, sigh of relief on that one. And as you said, this may play out in court for years and there may be incremental news, but, for what's on the near-term horizon, it's not an issue.
All right, let's talk about what else is shaking out markets. And it looks like bond yields have been going up. And I've got my eye on the 30-year notes, which are just getting closer to 5%. Walk us through what the implications of where bond yields are going and what it means for the rest of the markets.
Yeah, so there's a couple of forces impacting the bond market right now. The U.S. government ends its fiscal year on September 30th every year, and the U.S. Treasury still needs to raise several $100 billion against its $1 trillion net funding goal for the quarter. So there's going to be U.S. Treasury issuance, across the maturity spectrum. So one, supply coming to market. Another, the U.S. Congress does need to pass another continuing resolution by the end of the month. Likely they'll do that. There may be some drama going down to the wire, but they should get a continuing resolution passed. But otherwise, there'd be a government shutdown for October 1st. That always gives bond investors a bit of pause. And then the one that's out there that's a little bit unique, and we really don't know where it's going to go, is that, an appeals court did say that the Trump administration tariffs are not legal, or at least the statutes under which they put them in place are not legal. That's going to eventually make it through to the U.S. Supreme Court. The tariffs are going to remain in effect through October 14th, but if the administration loses out on this one, they may have to refund all the tariff revenue. And again, that's going to put a tax on the U.S. Treasury to refund all of that money. So there's a lot of push-pull in the bond market, and that's why you see yields about 4.20 on the 10-year and 4.90 on the 30-year.
Yeah, with that risk-reward equation for bonds going up, does that pose a threat to the equity side of business?
I don't think it does. I think equity investors really are a little bit more focused on the short end of the curve here. Obviously, we have Federal Open Market Committee from the Federal Reserve coming up on September 17th. Equity investors are, I think, dialing in about a 25 basis point interest rate cut, which is sort of where Jerome Powell guided everyone in his Jackson Hole speech. Now, a lot of that, the Fed has been data dependent, so I think a lot of it is really going to depend on Friday's labor market report, because if you remember, if we go back to the last Fed meeting, they had two Fed governors dissent on the vote that they didn't want to leave interest rates flat. They wanted to actually cut at the last meeting, and that was because they said, we're too focused on inflation. We need to change the focus to employment. Employment's been weak, and we need to make monetary policy less restrictive so that we don't impair the labor market. So I think if we get a weak employment report, that sort of makes the case for that 25 basis point cut in September. If you get a blowout strong labor report, then maybe that gives the Fed the data to say we can be on hold a little bit. But I think a lot of the equity market is positioning itself for that eventual Fed pivot to lower interest rates.
Yeah, let's talk about what we are getting in terms of data, because we did get the second quarter GDP numbers coming in, the revised numbers. What is that telling you about the U.S. economy, at least in terms of the growth areas and the momentum?
The first time GDP was released a month ago to the revision, what we found out was that consumer spending and business investment came in stronger than that first release. And especially in business investment, it was in the intellectual property area. So that would be like software and research and development. And then business equipment purchases were also revised higher. That kind of tells me that the spending that we see on AI actually is coming to fruition. There's investment in software, research and development, and then capital equipment required for data centers. So I think that's pretty positive for the AI trade. If you remember, we go back earlier in the year when DeepSeek came out, and then everyone was like, oh my God, why are we bothering to spend so much money investing in AI? It can be done fairly cheaply. That sort of as reverse course. AI has proved that it's a little more robust. It can do some really amazing things, and the pace of that development is almost uncanny. Every month there's a new AI program coming out that does something even more incredible than the rest. So I think that's an investment sector with some legs, and you can play that a lot of ways. You can play it through data centers in the real estate market. You can play it through capital equipment and electrical equipment. You can play it through the utilities that power the data centers. Every place data centers are going in, they're having to secure power contracts with either the local utilities or an independent power supplier. So I think that there's a lot of ways we're seeing a positive impact from AI in the economy and GDP.
All right, watch out for the impact of AI to play a part in the coming numbers for the next few quarters. And we've been in conversation with Joseph Sroka. He is the Chief Investment Officer and co-founder of NovaPoint Capital. Joseph, thanks as always for your time and insights.
Thank you, Ryan. Have a great day.
Great chatting with you. Stay Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.